Why do most people lose money investing? It's actually one of my favorite questions to answer because I was one of them. Yeah, so I started investing somewhere in my mid-20s and in the early phases of my so-called investing journey, right? In fact, I didn't know what was happening. So I thought investing is trying to get share price, so I put my money in. And of course, eventually when the dot-com bubble burst in 2001 and 2002, I lost money. So as I reflect back, right, in all the encounters that I've been through and these questions, one of the key reasons why we lose money, right, is because of the lack of knowledge. There are two variables. The first variable is the lack of knowledge. So in other words, the more we know, the lesser the chances that we're going to lose money. The lesser we know, the more chances that we're going to lose money. So that's one variable. So the second variable, right, is the nature of the asset itself. For example, there are many things you can buy. So for the past many years, some people are very fascinated with cryptocurrencies. So if I randomly walk down the road and then people say, oh no, I bought Bitcoin. And if you ask them, what is a Bitcoin? What is a crypto? What is a blockchain? I'm just guessing most likely they won't be able to tell me the answer. So you see, they bought crypto and then they don't know what crypto is all about. So am I right to say that the lesser you know, the risk is higher, right? And then if we go back to the nature of the asset itself, so if you look at the assets, predominantly there are two types. If we are unable to distinguish which are the two type assets, there's a high chance that we're going to lose money. So let's look at the first variable, right? The nature of the assets. So predominantly there are two extremes. One extreme of the asset, they are known as productive asset. As the name implies, productive, that means they are producing something. That's why they are productive. So for example, if you buy a condo, you rent it out. You collect rental, right? Yeah, so it gives you something, it produces something. So renting of a property is an example of a productive asset. So if you buy a stock, a good one, yeah, that produce income, maybe DBS and so on, right? It produce income. So the assets produce income, is producing something, it's a productive asset. So that's under the nature of the asset. Now the other extreme of the assets are non-productive. Yeah, so what do I mean by non-productive, right? If you have, let's say $500,000, you bought a block of gold, which is 10 kg. You leave it in the safe for 100 years. 100 years later, you take it out, right? The block of gold is still 10 kg. It doesn't become 11 kg, right? Yeah, so now the question is then why would anyone buy something and that something doesn't produce anything and then you just want to leave it there hoping for the best? I think one of the key reasons why people do it is because they have this assumption, they have this wish, belief that over time, things like gold should go up in price. Yeah, and if they see something shoot up, like let's say Bitcoin, in year 2021, anything that goes up, they thought that it will go up forever. But we must understand that the nature of non-productive asset is they produce nothing. When you pay $100 for it, there is no way for you to know whether the price will go up unless you're able to find someone who's willing to pay a higher price. So this is quite dangerous because you're speculating, you're guessing, right? Yeah, or sometimes people, they don't use a nicer term, they call it a greater fool's theory. That means you buy something, you're looking for a greater fool to pay for it at a higher price. So that's quite dangerous. Now, but remember, doesn't mean that it's wrong. So you have your hard-earned money, you have a choice to choose something that produces income, rental, dividends, and so on. You have something that produces nothing, but you hope that people will pay for it at a higher price. So you ask yourself, if you take a few steps back, productive asset, non-productive asset, which one would you choose? So I think the most risky combination, which triggers the question of why most people lose money, right, is you buy a non-productive asset that is speculative in nature, then multiply by you know nothing or you know very little. These two combinations, when it comes together, is a disaster waiting to happen. Now, on the other hand, if you want to have like lesser risk, you want to make more money, right? Then out of the two assets, you may want to choose the productive, the non-speculative. Yeah, the companies that are good. Yeah, so that's one. Then multiply by you really know a lot. So if you put these two variables come together and then answering back the question, then you would no longer belong to the most people who will lose money, but you will belong to the lesser percentage of people that will do well over time. So in summary, remember, it's just my personal opinion, right? It's always good to choose a productive asset that's good, buy at an undervalued price, then multiply by knowing a lot more on what you're doing. Then if that's the case, most likely we will do well over time. So if you want to know more about investing so that you do not belong to this group that lose money, right, there are a couple of things you can do. Beneath the video, you'll be able to see some description. You can always click on some of the link where you can download some of a well-written guidebook to learn more about investing. You can also visit our website www.valueinvestingacademy.com. There's a blog with very well-researched, thorough articles that you can read. Of course, ideally, right, if you don't want to do all this work, there's so much work, right, please register for our upcoming complimentary masterclass just by clicking on www.viamasterclass.com, and I shall see you in our upcoming masterclass very soon. So see you. Goodbye.